Alright, guys, welcome to another daily market review. Today is Thursday, February 19th, and let's take a look at what happened starting with S&P 500 futures, the ES. So, my first idea was that if we go any higher here, we would eventually go and take out stop number one, take profit number two, and then get a short. That did not happen. Instead, we sort of tried to go the other way, but not really. So I expected it to go much lower. I thought that if we come here, right, at this level, I thought it would break and then would be in some kind of a range. So I wasn't expecting a big short or anything, but I was expecting us to be in a range right here in between the two levels. Instead, what happened is it did break this level, but then it just kind of ranged here and then it reversed. So I was not expecting that one. It did catch me a little bit off guard, though it does make sense if you think about it, because this is a huge area on the volume profile for the high volume node right here. See this cluster right here? Let me highlight that. So it would make sense that it wouldn't be that easy to just break down and just range here instead of reversing back. And then the other point that I missed is that there is a level right here. Apologies. Can you see? It's right here. Keep drawing it the other way, right here. So this level worked just perfectly. You could have longed right here if you were looking at the price action from the Tuesday this week. Was a huge bounce off this level, and then that led to a bounce in our trading day today. So the price went here and then reversed. So what you could have done if you were prepared for the breakdown, if you were shorting, this was a great opportunity to get short right here. So wait for the price to come back and then just short. I prefer this instead of just trying to short the breakdown at the breakdown level, even though I know the level is breaking down. It's just there's so many weeks and everything. It's just much better for it to go a little higher, get another level, that, or even better this, because it's higher, and then the trading opened right here, the trading day. So just getting short here was the perfect move, and then driving here, and then even though I was expecting it to go lower, you had a great opportunity to close it, and you had an opportunity to close once it breaks down here, then goes up, then goes down again, and you're thinking, oh, it's fine, it's still breaking down, but then it comes back again. Why is it coming there again? Fourth 1 hour candle, so it's a fourth hourly candle still coming back to this level. That's not how it's supposed to break. If it's breaking, it's supposed to chop a bit and then kind of come back and then break. If it's doing that, it's not really breaking, is it? It's just kind of trying to get back in it. So this right here on this candle was a good opportunity to close your short if you didn't take profit on this level, which I didn't talk about, to be fair, in my previous daily market review. So that's that. And then let's see, and then we're probably taking out this level, so I think we're eventually going higher and going to go to this level, the one I've been waiting for God knows how long. So we should be doing that if we take out this level, come here. Makes sense to me. Could we reverse and just go lower from here? I don't think so. I think there is a strong base here, right? This, which is all the way here. So once we're above it, really the only place where we can go is here, which is roughly this place, and I think we just take out this level. So that's what I would expect for tomorrow. So if we do come here, we might get a little sort of rejection, then eventually we're gonna wind up right here. So that's that. Okay, and then do I see another scenario for tomorrow? Sure, we could given that it's Friday, we could also just range maybe like this, and then take it from there. Remember that this is still a level until we break, but most likely I think we take it out and we just break, and then once we come back here, this is a level to get long, and then this is a level to watch out. Maybe try to short first time we come here, but then watch out because it's already testing this level. So this is going to be technically a second test. This is a first test, this is a second test, and then it's riskier the more tests you have, especially if it's hourly tests, because that's not the same as the daily. You really need sometimes one hourly test is enough for the level to break, so watch out for that as well. And then let's see if we could also take a look at the VWAP. It shows you here, looking at the previous day. Let me get rid of the drawings for a second. It shows you here that we were chopping on the VWAP, and then we kind of lost it, but we didn't even reach the first standard deviation band, the one that tells you to maybe think about longing if you're playing the reverse game. And we just were chopping along it, and at some point your instinct, which you would develop through screen time, would essentially tell you that something is off. We're just not losing, we're just still here, we're hanging on here for way too long. Maybe close that short position if you were in short position to begin with. And then if you look at the lower time frame as well, you'll see that we try to lose the level, get to the next stage, and then we found support right here, the level I talked about before, went up, tried to break the weekly VWAP, couldn't do it on the first try, came here again, and this is your cue to get out. And plus the day is closing anyway, so maybe not the best idea to be in the way of the price when it's the last 15 minutes before close. So always use stop losses. I'll try to make a video as well, I will make a video regarding stop losses and how to place them, where to place them, if I like fixed stop losses, if I like manual stop losses. I'll discuss that in one of the videos that I'll create here on YouTube. I'll upload it for free. And then yeah, that's that for the ES. Now let's take a look at there we go, at the S&P 500 ETF, the SPY. So essentially when the second route just kind of chopped right here, this level worked nicely. I think when I was drawing this yesterday, I used this as a pivot point to come back to the range, just based off of this level. I think for some reason it just stood out to me more than on futures. Not sure why I didn't see that on futures when I was doing the review yesterday, but there we go. Nobody's perfect, right? At least if you control your risk, if you do the proper risk management, you're never gonna blow up your account anyway, so that's fine. And then here I think that we are sort of trying to break this level, go here. This is a problem zone obviously, but just of the nature of this price action, I would guess would still eventually go higher, and this is the final target. And that's that for SPY. And discussing Thursday, pretty much the same that we discussed on the ES. Came here, reversed. This was a great short opportunity for a short right here, and then expecting this. Let me just make it green for a second. So that's kind of our positive scenario. So green right here, and then here as well, and then that's that. Do I see a range? Sure, maybe. I could see potentially a range here as well, but priority would be to go long. Although it is a Friday, so watch out for that. Fridays are usually very, very cheeky, so to say. They could end up in just a sideways chop instead of a clear direction Not to say that there are never clear directional bias Fridays, but they do like Fridays do like to be, you know, the kind of days where it just chops around, or just a volatile, just sort of sideways chop, and just like taking out the longs and the shorts at the same time. So watch out for that, given that it's Friday. And then quick look at the BTC before we finish with this daily market review. Let's see what's happening here. So I was thinking that it's going to be either a range in the lower bound or a higher range. I wasn't expecting for it to break down to the downside or break up to the upside, but I was expecting some kind of a sideways action from here. And it's funny how the price decided to just kind of stay in between. So it didn't really it didn't really go and do the upper range route, and then it didn't follow the lower range route. Instead, it just kind of did its thing in the middle right here. So that's funny, but it's still a sideways chop. That I did advise, I think yesterday, that you shouldn't be really looking for huge breakouts or huge breakdowns, and just maybe just like either take it easy, or if you are a scalper and you like those, you know, some sort of low volatility sideways chop kind of days, then you're here to fade the levels and just play it safe. Taking it from here for BTC, I would say that I still am not sure if there is a clear direction for either longs or shorts. So let's turn on the volume profile. Let's do a quick exercise, and let's see, maybe actually a longer kind of volume profile for this one. As you can see, we were in a huge cluster zone right here. It's a huge, there are high volume nodes, you know, several right here, but I would just call it one big volume cluster zone, and it was still in it, still defined by it. So we're still here. Chances are we're just gonna keep on ranging. Could be, you know, could have some fake outs right here, some fake outs here, but until we see a clear breakdown and then coming back to this level, and then that's your opportunity to fade and short. Other than that, it's probably, if that not happens, and same with the upside, right? Clear break, coming back here, you get long here, and then take it to the upside. Other than that, if that doesn't happen, I would not recommend trying to go for a breakdown or a breakout. I would just recommend to fade these sort of levels. You know, watch out for fake outs, possible fake outs, and just kind of play it in the range until you see this clear structure where it just goes like this. And chances are, given this is crypto, it could just not even give you an opportunity to go back to the level and would just break down here. Same with the longs, right? It could just not touch, so it doesn't have to touch it exactly and go up. It could just miss it by a little bit. I've had it happen to me many times. And if we take a quick look at the higher time frame, just interesting to see what's happening here with the higher time frames. Give me 1 second. Yep, it's just, can you see? It's just narrowing down after making this violent move. It's just sort of containing itself and just becoming narrower and narrower, and eventually one of these is going to give out. And when it does, I would recommend to stay away and not get on its way. Either go along with it, trade it directionally with a trend. Once it breaks, just don't fade it probably, right? So if it breaks, most likely don't try to long here or halfway to here, right? Just go along with it. Wait maybe for little rebounds here, and then just take it here and sort of look for take profits here. Same with the longs. You know, the optimistic target is right here, based on this level right here, and then the more conservative would be this right here. So watch out for that as well. Again, play it safe. Take into account that on Saturday usually you either get violent moves and it's not based on what the S&P 500 is doing, or often as well you also get just mindless chop, mindless range, and sometimes it's not even worth to trade it. Again, unless you were a scalper, low time frame trader and you enjoy that, then of course go for it. If you're looking for clear directional trades, then in that case maybe skip the Saturday. So yeah, gave you the levels, up to you. Again, thank you so much for tuning in, and I'll have another daily market review tomorrow or Saturday. Thank you.